Good morning, good morning, good morning. All right, good morning. Good morning, Abe. Good morning, Adam. Good morning, Brad. Good morning, James. Pat. Good morning, Scott. Good morning, Stephen. Good morning, and Omer. Good morning. All right, guys. So we're getting, yeah, you gotta do something, bro. Yeah, we're getting a flush here. Harmony zone. Good morning, Sheila. Good morning. What we got going on here is we got a flush against this captain. Let me enlarge this so you guys can see it. We had a captain set up long right here. The market came and sold under it. Harmony zone target number one is hit in this rotation. There's a potential for us to get to the next target of 826 and a quarter. And harmony zone number two, not harmony, target number two is 676. That's on a swing trade basis. Rallies are shortable. We have harmony zone number one, which is 76 by 86 and 901 by 911. And as long as we continue to trade under 900, these rallies are shortable into those bigger targets. Yeah, we're getting a bit of a pause here. Yeah, good morning, Joseph. So as long as 900 is still intact, we're going to look for these run-ups as a shorting opportunity. And we're expecting, especially with this captain set up long, they put down here at 51, a bit of counter trending going on into harmony zone number one. It's early on a Monday, so we're going to spend, let's take a look here, Forex. So we have factory orders at the top of the hour. That's about it as far as news. So harmony zone number one hit, That's the first test of it. That's a nice reaction to that zone. I mean, that's how you typically want to see it. And here comes a little bit of a flush. So what we're seeing here, see how we flushed this captain setup, and now we're bouncing right back up, close to harmony zone number one. That's a consolidation pattern with a bias toward the shorts. I mean, here we go back again to that zone. If we start breaking anything above 75, we're gonna get a disconnected out of harmony market, and that's gonna lend itself to a two-sided market right now and a potential retest of 900. So we need to kind of watch out for anything above 75.80. ES, let's talk about ES here for a second. All right, so what we got is harmony zone number one, excuse me. So we're looking at 74 by 77 and 81 by 84 is zone number two. And we're looking for this rally into harmony zone number one to hold, and us getting to 62 and a quarter. We'll reevaluate that idea under above 80. I mean, it looks like they're gonna chop it up here. I'm gonna chop it up, which is to be expected. Hey, Lance, Fed, good morning, buddy. How are you? Uh, Here it comes. Here it comes. Here it comes. Here it comes. $71. That's interesting. Huh. Yeah, we get back to that 41. I may take a look at it here. Yeah, let's see if I can get something going on here. 41. Yeah, the 41. I mean, I didn't want to buy the 41. It needed a little bit of a pullback, but here you go. Hey, Miguel, good morning. Hold on, good morning. You got 41. You got, what is that, 49. 50 and 65. Okay, 50 and 65. 50. Gonna pause here for a second and see how well they handle this. Yeah, like see that kind of thing. It's really really choppy. So that 41 into 31. Yeah, here they come again. Actually, that would have filled me in for a good order. I just want to see more of this market, but definitely what we're seeing so far is weakness, weakness, persistent weakness. Yeah. And you definitely don't want to see 62. 62 will make a captain setup on the 70 NT wrinkle and 52. 52 and 62. That's two places where you don't want to necessarily see the price go to. I mean, we're seeing a disconnect as well between how NQ is moving versus ES. ES is a lot stronger, and weakness in NQ is very pronounced. Like it's the disparity between the two is strong. Our target for this rotation is 826. 826 is our target. Yeah, they're trying to hold it here. This captain setup right here, the long that they put on the 20 NT Rinko, that's an important event, and we need to break that fairly quickly, or otherwise we're gonna probably go to that 64. If we don't take this level at 36 soon, we're gonna go up to that 60 something, 62. All right. Here comes that target of 826. That's what you want to see from the short side. That's what we want to see. Here we come. Here we come. You bastards. Didn't did that. Here we go. We hit the target. Next target is 15,801 and a quarter. Zone number one is 51 by 61 and 76 by 86. Zone number two. And we are going toward that target. We'll reevaluate this structure if we break anything above 70, 870. Rallies are shortable. We're chewing through ES harmony zone number one to the upside at 74.77. We're breaking through that pattern. So you're getting a bit of back and fill behavior back into harmony zone number one and on NQ. I mean, here we go. This is the first touch of this new structure. We got 3 minutes to the top of the hour. There's a probability. Mama. Hey, DJ. Good morning, DJ. How are you, buddy? All right. What we're getting here is a bit of it's a bit of a pause. Be honest with you. So just be careful. You know, trying to get short. It may be a bit forceful on the way up. The market may be a bit forceful on the way up. So just be conscious of that. We almost need the market to go back down to 35 in order for it to start triggering the shorts. Yeah, yeah, Omer, I see that one. It just they they're putting the brakes on. Yeah, they're putting the brakes on. Okay. So the market is still reacting to harmony zone number one. So we tested it once here at 71, and now we're testing it at that 50. That's good. We need to see that 35 break. Okay, okay, okay. 9 o'clock. We gotta protect that 51. Yeah, it looks like we're gonna counter here. The market is gonna counter. I mean, we had somewhat of a sell-off here in ES that was out of the ordinary, in a way. We're still looking for rallies as a shorting opportunities in an extended market, so we need to be a bit careful and look at it from the scalping perspective than anything else. But that's what we're looking for here. 48. 45, 48. Okay, so okay, this is the second time we test that level. 15. Okay, so we need to not break. Yeah. What we're gonna see here is a counter trend coming into the market, um, especially after the break of 64, which we're gonna have here shortly. I know that's what I was looking. I was like, okay, if they cannot do it here, that's a near term. I hate to say that word, but a near term bottom to the price action, and there is a pattern of, that one, huh? So now against that low, you're gonna get a push upward, and pullbacks can have a stair step reaction to it. But the shorts are not done yet, and the 40 NT wrinkle. Yeah, you're right. So we're getting a counter trend here. Ultimately, I'm looking for rallies as a shorting opportunities, but I'm recognizing this pocket of buyers coming in. I want to see how strong they are and to what extent they're pushing the price. The last line of defense for the market is like 86. So anything between 76 and 86, you're going to get a market that's, the shorts need to show up there, or otherwise we're gonna get a complete reversal of this behavior here, and a 901 and a quarter close. So far, what do we have out of this market? What are we seeing? What's going on? The dominant force is the shorts. We're getting rallies within the structure. We keep hitting harmony zone number one and fading back in, and that's a good thing to see. We're getting also pockets of buyers that are trying to defend here. I'm gonna be patient, and especially on a Monday, the first half an hour, 45 minutes. spending time with the market and just figuring out what they're doing is the best approach. I mean, this is if they do a six prong captain setup, that may be just a quick scalp up 51 and a quarter. I can't do it with too many contracts though. So I'll post my order right here, 51 and a half. And I'll be looking for just a quick if this candle closes lower, I'm out of there. Yeah, no. Yeah, no. That's fine. Very, very noisy. So the reason why I was even attempting to go long here is because you have, the 100 is out of sync with the 200, so that's giving us pockets of buyers. And if we get a six prong captain setup, then that's good for a run up to 61. So it was worth taking 1 to 2 contracts and go for that with a small stop under that low of 41. But the minute that candle did not close higher and closed lower, just that idea was nullified, canceled the order. Yeah, the ultimate swing trade is 801. That's where the market is heading to, and 5161 is zone number 1. And then you got zone number 2, 76 by 86. If we can get the market to close below that 25, 26, then the market is back in sync on the short side. The dominant force has been and continues to be the shorts. Where would that change and shift? 75, 85. We start breaking those levels, then you're gonna get all right. Well, good for them. Good for them. Good for them. 25 and you break. I mean, the shorts were in charge. It was very noisy in here, but they finally made the decision. So the bigger picture, like we talked at the start of the day, is target number two on the swing trade basis is going to be 676. The target coming up here is 801, and you have this area right here that the market is trying to go through, and once we start breaking here, we're gonna get a bit of a push, then a little bit of a pull, and then we can start seeing a potential attempt to that target. As long as the 200 NT Rinko is short, that's the inclination I'm gonna have. Short and trading under that 70. All right. Target is hit. Target is hit. Now the next set of targets are 776 and a quarter. Harmony zone number one is 26 by 36 and 51 by 61. Rallies are shortable. We will reevaluate if we break 47, 847. We're looking for 776. They're slapping this market around. Target is hit. Next target is 751 and a quarter. Harmony zone number one is 801 by 811 and 26 by 36. We'll reevaluate this by if we break 820. I mean, we're getting to a point where this is just a free fall here. So let's talk about the bigger target that we've been talking about here. So 676 is the target that we were talking about. That's the big level. That's about 100 points lower. I mean, obviously we're gonna get a pause, retest, and a bunch of other things going on here. But that's ultimately the target we're looking for. We'll reevaluate this idea once if we get above 820. Target is hit. Target is hit. Next target is 726. Harmony zone number one is 776 by 86 and 801 by 811 is zone two. We'll reevaluate this the shorts above 800, and rallies are shortable toward the next target. Same thing is going on in ES. So you're kind of finally catching on. So we hit that target. We're about to hit the next target of 56. Harmony zone number one is 68 by 71 and 74 by 77. Rallies are shortable. You got to break the 56 though. You can't pause here. I'm gonna take a chance here on a fade. I know it's a little bit aggressive, but yeah, we're a little bit overextended. So I'm gonna take a shot at it here at 50. Really? Yeah, good for them. Good for them. Wow. It's still strong here. Let's see if we can get out of that one. Yeah. Okay. That's fine. That's fine. That's fine. That felt like a boredom trade. So 51 to that 33. Watch it. Watch it bounce back now. Hey, good morning, GED. Why? Yeah, well, that's that. Okay. So, I mean, they're trying to stabilize it. I know I was a little bit early, but you're getting a little bit of accumulation going on here, and especially with this pattern that they just put on. I'm expecting prices to be in the 60s to the 70s. It's almost like I have to be accumulating myself, as well in a bit of a range. Yeah, I mean, see, that's the kind of thing. I guess I just didn't want to risk too much, but let me. I have to be willing if I'm gonna do what I'm doing right now. I have to be willing to actually take a little bit of heat. So I'm gonna start with one and accumulate in a range between 44 to the whole number. I'm just gonna have to take that type of risk for this type of trade. I don't necessarily want to go break even yet, to be honest with you. I'm adding to it here, then I'll go break even, and then it is what it is at that point. 52, if we can get back to 52. We're gonna go 33. I'm gonna actually tighten things up. We should be getting to that 60 range, or so I'm risking 3 points, 3.5 points for the potential of getting to the 70s. It wants to. Okay, that's fine. I'll keep it very tight. Ah, they suck. Well, they took one of them. How you there, bastards? Look at that. I'll take it again. That's fine. They took one. Really? That's just a chop fest. Well, whatever. That's fine. I'm comfortable with that. Ugh. So we basically traded twice in that same zone. So we're gonna leave this market alone in this area and see what they need to do here. But this 6 prong captain setup short that they got going on here, if we start trading anything above it, above the 51, that's gonna trap everybody that stayed short, and you're gonna start getting a run above 60, 70 into the 80s. And the market is in sync on the short side. So really, I should be thinking in terms of shorts, but we're coming to zones that are it's congested. Like you could see it here. We got very close to 726, which is the the next target, and we paused at a target number 4. So right here, the market is at a minimum pausing. Good morning. Good morning, Mike. Good morning. I mean, they put that captain setup switch trade right here. I mean, I get what they're doing. I get what they're doing. So we got 4 minutes to the top of the hour. You could do that. You could do that. Ugh. So looking at this market right here, I mean they're basically consolidating. I mean they took one rotation lower, came back and retested. They're showing a bit of a bid. They gotta test this area right here and potentially go to that 570. We could see the price action also slowing down. So by looking at this market, what are we looking to see? I mean, if they're gonna get to the 5770, that will set the stage for a bit of back and fill type of price action and a pocket of buyers. Otherwise, the mode of this market is rallies shortable. Yeah, we're seeing that the market's trying to stabilize these levels, and that's what got me kind of start to go long here and went long here. It just it was a little bit, probably a little bit too early, but that's basically what we're seeing right now, and they're testing harmony zone number one. I mean, ultimately we gotta see 770 in order for this structure here to be stable a little bit on the long side. All right. All right. So how's everybody doing so far? Let's talk it up here. How's Adam doing? Brad, DJ, any trades? James, Joseph, Mike, Pat, Scott, and Sheila. GED, Miguel, Hold'em. Well, hold me. Lines Fit, how are you? Where we at? Yeah, that's not good. You're a copier, just. Oh, you know what? Probably. Man, I tell you, this flow bot that I got going on, I don't have problems with it. Like, I don't have problems like that with it. Sheila, I'm gonna send you a message. Here you go. Mike, I'm sending you a message. GED up 195. Lions Fit up 295. All right. Scott, how's Scott doing? There you go. That's what I've been. That's what I've been looking for. That's what we're looking for. So now that you have a disconnect between the 200 and the 100, and the market is out of sync, and there's pockets of buyers that are firming up. You know, as long as the 770 is the key, though, you got to get to 770, 780. That will firm things up a little bit more, but come on. Soup, 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 soup. All right. So, yeah, that's we're getting a stair step behavior, guys. I mean, that's what we're doing here. Yeah, we should be getting to that 70s, 775. We should get something going on here. They're trying, like, initially they touched the zone number one, and now they had another leg and another leg. So there are pockets of buyers that are trying to firm up this price, and it's given us opportunities on the long side, and the short side is taking a break. That doesn't mean it's not going to come back, but there are opportunities to go long in this rotation as the as the price is going to bounce between harmony zone number one and two, which we're going to see here fairly soon. So 72, 73, that should be something to look forward to. It's 1029. Okay, that's fine. There you go. 70s, 70, 72 coming up. right? Here comes the bottom of the hour. There's a lot of reasons, Scott, why that is a behavior that most traders go through. I mean, really we need to be sitting together and talking about it in depth and detail because it's different from one person to the other. But the common denominator is your fixation on equity and oversizing while you're fixating on equity. So you're you're trading your evaluation like you don't care, and once you get to your PA, you care a lot because it's real money. So emotions are high, your sizing is off, and you tend to um, not to deviate from what got you to the PA. And there's a lot of reasons embedded in that that's unique to you as well. How you process pain, pleasure, how do you what do you do when things are working? Because everybody trades well when things are working, right? But most people don't trade very well when things are not working. Do they continue to try to dig themselves out of a hole and then they dig themselves in a bigger hole and blow up? What's the first signs of the wheels going off, and what do you do then? It's literally it's multiple conversations we need to have with you, and because that's critical. I mean, that's really literally is going to make a difference between you making it or not. So I mean, here we go. I mean, that's just kind of the. So I'm looking at myself here. I'm like, okay, you came a little bit early. What I needed to do is add in a range against that whole number, which I started to do, and then I was like, okay, well, let's keep it tighter. And I took that stop and I just waited. Now the market is really trying to do what we expected it to do in this rotation, is to go through a process of accumulation and start bouncing right back up. And we'll find a trade here soon to get in. Mike. If it's not working out for you, Adam, and it's keep erroring out on you, take a break from using the copier. Uh, I mean, again, I have this copier with Replicanto by Flowbots, and be honest with you, just I don't have that many problems with it when it comes to reversing positions on me. That does not mean it didn't happen, but it doesn't happen at a rate that is prohibitive from me really working with it. So to take a look at that and see if it's something that you'll be interested in. But with Apex, they're really just shifted the code altogether. They're not even using the same code that they used on the older copier. So I think everybody's expectation was that it needed to work a little bit better, but you guys are saying it's not. I mean, I'm getting reports also with the Apex servers are a little bit slow. So kind of factor that in as well, because orders are not coming out as quickly. I'm getting reports of that as well. So just be conscious. They may be going through some issues. Well, here you go. I mean, um, Adam, I'm getting lines fit from YouTube is saying the following: I refunded my copier with Apex, and here I'm not trying to get you to buy Apex or Replicanto by Flowbots. It doesn't matter to me at all. I'm just kind of sharing with you what other people are saying here. But Lansfit is saying he refunded his copier with Apex, had problems, bought Replicanto by Flowbots, and it's been working fine. And that's his experience and my experience. Okay. So take that for whatever it's worth. Thank you, LensFit, for sharing your experience. Uh, Mike, you could get data from NinjaTrader. You could open a small account, put $100 in there, or a couple of $100, and just get data from them, and you'll be good to go. If you're going to be looking for stocks, I thought you said. Okay. I think they have stocks. Let me see here. All right. What is going on? What's going on? What's going on? What's going on? What's going on? What is going on? Here we go. So we're hitting harmony zone number 2, which is the 76 by 86. You start breaking anything above that, then 801 is a probability, and then pullbacks become buyable more on a swing trade basis. We have a lot of room between 800 and the middle of the range, which is 924. That's about 120 130 points, that the market has the potential of actually coming in and trying to recover. Okay, so the longs are taking a stand here. They're taking a stand. We can see it. We're kind of saw the early signs of it happening here, and now, let it run up and pull back, and we'll start buying and holding and going from there. So back to you, Scott. There's a process called isolate, dissect, and dissolve. Again, it's called isolate, dissect, and dissolve, which means you have to isolate the core issues that are preventing you from doing a behavior that is consistent with a winning trader. Dissect it to its own components. So if you're holding on to trades too long, or you're not taking your stops, or whatever the case happened to be, why? What's preventing you? What emotional blocks that's stopping you from doing that? So when you isolate the behavior, then the components of it, then you instill different patterns, mental patterns that prevent you from repeating it, and or reduce its impact on your overall trading. Most people end up blowing up their accounts due to sizing and not adhering to to risk controls per what an account can handle. Those are typically how people can do that. So if you're passing your evaluation and then right when you get into your PA, you're blowing it up, then there are patterns, mental patterns that you are repeating that you're not even aware of. And most of it's sizing, it's fear of loss, focus on P&L. Yeah, I mean, it's your sizing. We got to go back to what makes sense. All your emotions are going to come up from that the trade has to work. When you are in that mental space, the trade has to work. You are by default emotional. And the quality of your decisions are below average at that point. That doesn't mean the trade works or doesn't work. Just over a sample of 100 trades, you are in that emotional place. The quality of your decisions, you're either get out too early or get out too late, or you move your stops, or you oversize, or you add. It's just the quality of your decisions are going to be lower quality. So if the mental state is, it doesn't matter if it works or not, because I have 25 decisions that they have to go against me before I blow up my account, then you're going to be relaxed, and you're going to adhere to your stops, you're going to adhere to your profits, you're going to make better decisions over time. So you got to take your risk capital, divide it by 25, and take that amount per trade, and that will set you, I mean, there's other things that needs to happen as well, but that will set you on the path of behaving in your evaluation the same way you behave in your performance, PA. And you make that a habit. Winning is a habit, right? Losing is a habit. Most people invest in losing habits and they repeat them. And when they try to adjust, they adjust. They're almost like they're practicing their own failure, thinking they're making an actual change. In reality, all what you're doing is just you're re-emphasizing and you're training yourself into just doing the same behavior that losing you money or blowing up your account. So take a step back. It's just George Costanza. Yeah. It's not necessarily the opposite, but what's the job of a trader? What's my job as a trader? It's no, no, not even that. Absolutely not. Win more than you lose. Winning and losing is an outcome. And guess what? You don't have control over the outcome. You don't. I don't care how long you've been trading. I've been trading for a long ass time. I don't have control over the outcome. But what I have to have control over is the quality of the decisions I make. And I hope with good quality decisions that my winning rate is higher my losing rate, and the average win is higher than the average loss or expense, and then that it'll reflect positively on my equity. I have zero control over that. As long as you structure your business correctly to begin with, after that you don't have control over it. Okay? But my job as a trader is never to obsess over my P&L or look at how much money I'm making or losing. That's not the game. The game is, and it should always be, did you make a good decision or did you make a decision that was inconsistent with your trading plan? That should be 100% of our focus as traders. That's the only thing you have control over. You could literally make money doing the wrong thing, and over time you will end up blowing up, you know. And you could make the right decisions and end up losing a little bit of money, but over time your edge should compensate for that. Anyway, man, it's we could talk about that, me and you, kind of privately, and kind of dig deeper, because it's something that if left unchecked and or not resolved, you'll be here for years spinning your wheels. I've seen it. All right, so back to this thing. We're sitting here talking. Yeah. So we're about to get to that 801. And the key is also, Scott, you gotta celebrate your losses. You gotta celebrate your wins, and not. It's like you don't care. Like, okay, I won today. I lost today. I'm gonna celebrate it, but I'm not gonna emotionally get attached to either of it. Yeah. Another one is equity addiction to equity peak. I call it the equity peak syndrome. I, it used to get me all the time, where I fixate on, like, okay, I'm trying to get to 3 grand on a $50,000 account, for example, and I'm like, okay, I'm at 2 grand. I only need 1,000, and I get a trade, for example, and it goes against me, and I don't want to take the loss because that 2,000 is so pretty. It is so pretty. That 2,000 is so pretty, and I don't want to go from 2,000 to 1,800. 1,800 is not as pretty as 2,000. And you hold on, you hold on, you hold on, you hold on. You end up blowing up the account. It's focus, and you'll be surprised how many people blow up. Not only just PA's accounts, their actual real life accounts, just with that idea, the fixation. And it turns out that focus is not as much of a mental as a physical action. Like when you focus, most people they think they mentally have to focus, but in actuality it's more of physically you have to focus. Where your eye is focused is actually will shift your it shifts you mentally. Anyway, so 10:51. Let's see here. Okay, we're done talking about that for now, and you're getting that reversal that we were talking about, and the next target is 826. Pullbacks are buyable right now. The market is in a rotation to the upside. There's a potentiality of getting all the way up to that 920 that we talked about as a reversion to the mean trade. That doesn't mean that the overall structure of the market here is not short, because you're looking at this. You're looking at this channel, and we're at the bottom end of that channel. So the market could literally run up all the way to the top end of the channel and come back down and sell off to these bigger targets. Okay, but we gotta trade what we see in front of us, and right now the market is in a pocket, and the pocket is to the upside, and that's the direction I have to be considering. And once that disconnects and shifts back, I'll start going short again. In this rotation, I would not be too heavy long either. I would rather be heavier short than heavier long. So consider that as well. Man, what a one hell of a run here. One heck of a run. Target's coming up. 826. All right, guys, that's it for me for the day. Okay, and we'll see you guys bright and early tomorrow. Now, the next target that we're going to be looking at is 851. Pullbacks are buyable. Harmony zone number one is 801 by 791 and 776 by 766. Reevaluate the strength of the long if we break anything under 780. And that's it for us for today. We'll see you bright and early tomorrow. Have a good one.